Welcome back. Talk about the stock market taking a dump. First of all, I'm not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest in anything you're not willing to lose or lose sleep over. Know what you're doing. Deleverage. Now's not the time. Let's listen to Kramer.
Stocks are the ones that get hit hardest in a tightening cycle. So here's the bottom line. Now you know how to bet with Powell. If you think that Jay Powell wants to destroy the economy, you pour the sark over the ark and you bet that they all drown and no one gets out alive. Let's take some calls. John in Pennsylvania. Stocks are the ones.
Sounds like someone's still long. Anyways, yeah, he's making fun of Kathy Woods' ARK ETF, and there's a bunch of other like Robinhood and Tesla. All of these growth stocks are finally, crashing again. A lot of them are down like around 50% or more. Let's real quick look at the ARK fund. It looks bad. It's funny. Wait, hold on. We'll talk about the yield curve, we'll talk about the news, and we'll talk about the markets and everything going on. Here's the ARK fund. This is what happens when you bet that the central bank's going to print forever. And they're not going to do anything about inflation. This is what happens. I wish I shorted it, but, I can't do everything all at once. It would have been nice shorting this. Anyways, it fell about 60%, 59% from the all-time high. It's Kathy Woods' ARK fund. It's like mainly comprised of everything that's shit that's pretty much in a bubble. A lot of it, I'm pretty sure it's over 20%, maybe even 30%, is just Tesla. So, if we take a look at Tesla, and remember, Elon Musk, that little argument he got in with, what was her name? Forgot her name. Pocahontas, you know what I'm talking about. That one congresswoman, police socialist. He got in that debate with her on Twitter, and he was like, "Oh yeah, you want me to pay more taxes? I'll have to sell my stocks." And I believe he knew that a correction was coming, and I pointed it out at the time. So he was like, "This is a great opportunity to get out at the top," because he knows his stock's overvalued. I mean, he sees the books, or the real books, you know what I mean? So he got out, and this was Elon right over here. This is a weekly chart. I believe he was selling right here. And now Tesla's still up though, if you look at it. It's not that bad. But still up. So from March of 2020, or no, 2000, is that only 2020? It's crazy. Anyways, from this low right about here of 2020 in March, the COVID dip, Tesla was at $67, and its all-time high at 1,243. It outperformed like most cryptos. That's how crazy this was. Rally. It went up 1,585% from around $73 from the COVID low. How crazy is that? Yeah, so her fund could blow up. I think it might blow up. And why am I saying that? Because I don't think they're ready to. I don't think Powell's ready to capitulate just yet, because inflation is that bad in the U.S. And people are arguing like it's not that bad. I'm like, what are you talking about? Like, have you gone to the grocery store? Have you looked at the housing market? Every boomer's house is up like 5x, uh, just by sitting on it. Which doesn't. It's fake wealth. It's not even real. Because if you go to sell your home, right? Unless you're smart, like if you sold like right now or like this past summer, I was telling people who were looking to sell, I'm like, stop waiting. You got to get out now. And what is it called? The website for selling homes, Zillow. Zillow, and then there's that other website where they were buying homes and then trying to flip them, but the margins were too thin. Anyways, if you sold then, right, and let's say the housing hypothetically does, we get another 2008, sort of like a mortgage-backed security crisis, something like that. If you sell and lock in those gains and then downgrade, go live in an apartment, maybe put everything in a storage container or unit, and wait for the housing market to dump like 40% or something, 50%, then go and maybe upgrade a home or buy something similar, but you'll keep the difference. But it all depends if you actually own it and how much equity you have in the home. But a lot of Americans have been tapping out their home equity line of credit by refinancing or their mortgages, right? And then they were pulling out cash. This is what they've been doing in the past 2 years, and not going to work and pulling, getting stimmy checks, getting the child credit. That's what they've been doing for the past 2 years. That's why everyone just bought new cars. That's why used cars are up over 40%, something like that. And everyone's been buying product. And because of this, the U.S. has an enormous, record-breaking trade deficit, which is like over $1 trillion for last year. Never before in the trillion. Prior, it would be like 400 billion, 300 billion. Now in the past year, recently, it was over $1 trillion. And this is also because of all the PPP loans that all these mid-sized companies, all these companies got, corporations, everyone. So everyone's inventory is high right now for the big companies. And I believe they did that. They bought all this inventory expecting the economy to come out and be booming and everything. But maybe some of them are just smart and they bought all this inventory because they know inflation is going to go higher and higher. So they're front running inflation possibly. A lot of these companies, even mid-sized to small, if they're smart. And they won't have to raise prices too fast and then lose their customer base. But eventually they'll lose their customer base because once people could only afford to pay utilities and buy food, and that's about it, and pay rent or mortgage, then there's nothing left for buying, just going on trips and buying just products for fun. All right, so let's talk about the news, then I'll get into the charts and where the market's heading. Right now, my volatility trade to hedge my account, dude, it's up. This was a great trade. See, you guys need to stop. Most people, they lose money trading. I'm going to be honest. 2 reasons. One, they can't manage money. Or maybe it's 3. There's many reasons, but let's just cover a few. They can't manage money. They can't manage their position sizing. And they can't sit on their hands. Most people have to constantly be doing something. Like, honestly, with the markets, most of the time you make money by not doing anything. You catch the long-term swings, trading in and out, in and out. I've said this so many times. You raise the possibilities of making a bad trade the more trades you take. The probability of you making bad trades goes up with the amount of trades you're taking and doing. You know what I'm saying? So you have to wait for the market to come to you. You don't fight the market. You just wait for the big macro trades. And I've been eyeing this and I've been warning for a few months. Like, I started warning like I don't know, fall of last year, that sometime early Q1 of 2022, the market's gonna get a correction, and here it is. So I hedged my portfolio with VIXI and you know, SQQQ or VIX, and you're betting the volatility of the market's going to go up, and you could buy call options. I highly suggest you guys don't trade them unless you know what you're doing. You have like 7+ years experience. A lot of the times, call options you don't put on a large position. It's just there in case, right? Or you don't, because it's a call option is leveraging up your position. So I happen to buy like right down here around $16, and I am up massively, like almost 10x on that position. And I also deleveraged my resource mining stock portfolio. So I took off a lot of the leverage ETFs, this and that, because I saw this coming. I left all my main core holdings. They're still there. I'll talk about gold and silver and everything else. Uranium, natural gas, agriculture. But for now, the VIX is looking good. And I'm hoping it's going to pop even higher here. So there was an FOMC meeting, was it yesterday or the day before? I don't remember. My days this week are really running together because I've been up and we're busy sponsoring a NASCAR, which we got, which is incredible. I'll talk about that in my crypto video, but for now, let's stick to this. All right, let's get into the news. So Elon Musk tells Twitter followers to vote them out. Stands with the Canadian convoy truckers. All right, so in the macro, what's going on across this planet is people had enough, and it's over. We won. Freedom won. We're just going to go through the motions now. And the motions are going to suck. They're going to be bad. As an animal that's been wounded and hurt frolics around before they die, they can still cause damage, right? It's like an alligator out of the lake rolling. And yeah, so that's good news. The bad news is they're gonna start freaking out. And listen, guys, the people in charge are third, fourth generational wealth. They don't have what it takes to do what they're trying. They've already lost. They've lost the narrative. Everyone, not everyone. There's still a lot of sheep out there, but that's fine. Whatever. It only takes a small percentage of the population to just say, "No, this is bullshit. We're done." We can see through all the lies and psyops and whatnot. And there's enough people not going along with it. And as the economy gets worse, inflation gets worse. More people join the good guys, let's say, and they just lose power faster and faster. They've already lost pretty much most of their power because they can't control perception. Once you lose the control of perception, once you've discredited all of your control mechanisms, which is mainly the news, right? And these platforms like the one I'm on, they've all lost control. Like they're done. It's over. People can't be fooled anymore because the frog has sort of hopped out of the pot now. It's actually like out of the pot. And that's it. We're just going to go through the motions. They're going to do crazy stuff. Maybe pop off physical conflicts, right? I mean, there's one they're trying, right, in Eastern Europe. Other rising powers might take the Asian Pacific, and that's going to be crazy because semiconductors, everything uses them, vehicles, computers, everything. That's why I went out and bought a bunch of computers. So you got to get those things now because we might have shortages for years. You don't know until we start manufacturing them. And then who knows what's going to happen in the West. I see balkanization. I see fracturing, very similar to how the Soviet Union fell apart. So that's pretty much what's going to happen. And there's not going to be any great reset. It's just the great awakening. And I've been posting for the past 2 years. I've been constantly saying, the snake eats itself. It always does. And this had to happen, to be honest. Because people are just too fat, comfortable, and sheep-like, and hard times have to come. These are the cycles, and the cycles are necessary. And in the cycles, we do it to ourselves, right? What is it? Strong men create the good times create weak men, and weak men create the hard times. Well, right now we're coming out of that weak, complacent, feminized culture of weak men, and we're about to go into the hard times, real hard times, and and the cycle repeats. I don't have to, So hot dog prices are going up. Listen, this isn't even real food. Most of the food, at the store, it's just fillers. It's, chicken nuggets are like 60% corn. It's not even meat. It's disgusting. I saw that on Twitter. And this is why, guys walk around with man front ends. The algos. Hot dogs are going up. If you got to see how it's made on hot dogs. You'll never eat one ever again. So pipeline that goes through the Middle East up into Europe. That's what it's about. And the ports over there and everything right now that's going on in Eastern Europe. And honestly, I don't, nobody could stomach conflict anymore because we have our internal problems that are only getting worse day by day for the West. And same goes for not for Russia, but the Asian. But for them it's different. They have a lot of people, and they have a lot of men, and not enough women because of their child policies. And what they need to do is expand, because then they start falling apart from within as well. And they need more resources. And now they're branching out. That's where imperialism comes from. Nobody wants to admit it, but that's where your comfortable life and wealth comes from. It's from conquest. It always was, and it always will be. I don't know why people lie to themselves and they think it's not. It is what it is. Survival of the fittest. It's still in play. That'll never go away. The people who want it to go away, they can't compete. That's why they want it to go away. All right, so inflation's really bad. Oh, there was another video. This was really good. There was a hot mic, and one of the reporters was asking Joe there, as they were walking out of the conference room. He was asking about inflation. Isn't it bad for for elections coming up and whatnot? And he snapped and he said, "No, you stupid son of a bitch," and it was hilarious. But that spread. It went viral, and people see it, right? People see it in their everyday lives. They're seeing it. People talk on social media everywhere, and they do. I think the establishment, they don't feel it because they're all rich, but now they're starting to realize that the sheep do feel it, and they can't let it get into the sheep's psyche that this is only going to keep getting worse, and then the sheep start hoarding and start buying things ahead of time before the prices keep rising. Because once that happens, once that psychological thing happens, it's really hard to undo it. So they can't let that happen. So I think Powell right now, what he's doing is he's going to let the market correct a little bit here. Because like I said in my last video, when the market does correct and crash a little bit, the DXY goes up. And right now, there's other things happening that I don't think a lot of people talk about or know. But China right now is easing. So some of that capital flow might come into the U.S. markets if the U.S. markets correct. And then the Fed raises rates a little bit. Now, I'm not saying the Fed's going to raise rates. I'm just saying in anticipation, because everything within markets is forward looking. Everything is pretty much buy the rumor and sell the fact. So if Powell's talking about tapering and raising rates while they're easing in Asia, maybe some capital flow will come into the U.S. Or maybe some might flow out and go there, but I doubt it. Now I'm pretty sure some would come to the U.S. because they still want to get their a lot of rich people. There's more. The country which has the most rich is China. So, and they're still doing the capital flight. So that's something to consider. So what was I talking about? Let me read this. Yesterday, the FOMC held true to its monetary tightening timeline despite last week's 10% drawdown in most major indices, effectively saying 10% is not enough, with retail sales numbers that will surely return to trend without more stimulus. See chart. A gridlock Senate and the prospect of higher interest rates surely discount equity valuations. Why aren't more people selling? That's a good question. Complacency, and I do think some people think that the Fed's about to capitulate anyways. I think there's a little more downside to come, and then they'll capitulate. Consumers living with the U.S. non-farm payrolls versus retail sales. So payrolls are negative 4 million. Retail sales are up 22%. I mean, we just had a holiday season. Here's the thing. These numbers it's smoke and mirrors because the cost of things is going up. So technically your sales look better, but you're selling the same amount of goods or services. But payrolls are still down. So people are not getting paid more and are not getting more jobs or working more hours. This is going to change in the long term. Everyone who's been unemployed for like last 2 years, they're going to get jobs because that's how bad inflation's eventually going to get. That's going to come later this year, towards the end of this year, I believe. Don't get me wrong, the Fed will cave eventually, but they just sent a clear message that they need to see more selling. Will they ever make it to lift off? This handy chart, courtesy of Macro Tourist newsletter, has shed some light. So all other tightenings were with the stock market within 10% of the 52-week highs. So what they're saying is, we go to the charts here, look at the NASDAQ. It's a good one to look at. When they start tightening in the past, I mean, once they started tightening back in like 2016 or the end of 2015, that should be around here. No, that's 2018 right here. Oh yeah, well Powell's tightening. Or was it Yellen? I'm not even sure who was the Fed at the time. I think it was Yellen the first year for Trump. They started tightening, and then the market dumped in 2018. But they always start when the market's at an all-time high, and they did it back in right around here, 2015 and 16. They had like 2 rate hikes, and then they stopped, and then they had a bunch of rate hikes, like 3 in like Trump's first term or first year of his term, and then this was the repo market and COVID in 2020, right? But the problem is they haven't started tightening at all. They just started talking about tightening. And look at the market. Look at this waterfall. It just sold off just to talk about it. And as of now, they're planning on doing 3 or 4 the start of March. I highly doubt they'll even get to 1 at the rate the market's dropping here. And listen, if the NASDAQ drops below the 200-day moving average, oh yeah, it's gonna be nice. I bet we'll get around 1,200 at least, maybe even around 1,100 or 11,000. Sorry, 12,000 or 11,000 on the NASDAQ composite. There's some support around 11,580 around that area, and that'll also be the weekly 100 MA. Right now, we're just doing a little dead cat bounce off the 52-week MA, I guess. But look at this. On the daily, it's broken through the 200-day moving average, and currently we're below it. So, yeah. And the FANG index, it's on support as well, right here. And there's just a big air pocket all the way down to like 4,000 on the FANG. All right. So, Goldman president complains overly political Fed does not have the will to stop inflation. Yeah, I know. We all know that. It's not even. I don't even think it's like political. It's like if they stop it, that means like I think it means pitchforks. That's how bad things will get. I'm not saying hyperinflation is great either. That'll lead to the same thing. It's just that they have no choice. Now eventually there'll be a currency reset, but they're gonna keep playing this game because even that alone would crash everything, right? So they're not gonna. That's the last thing they do. The senior Goldman banker complained that the Fed's political independence has been hurt, which is blah blah blah, weakened its credibility with markets. The problem is that thanks to its newfound political bearings, the Fed is more reluctant to take dramatic but ultimately necessary action for fear of damaging its public image. Blah blah blah. What's gone on in the past couple of years has brought into question the independence of the Fed. Woodrum said that hours before the Fed's meeting Wednesday, he questioned the Fed's strength to act as an independent monitor. They have a chance to do that, but I'm a little worried about whether they'll stand up and do whatever. I'm not even sure why I highlighted that. Yeah, I mean, of course, they're not independent. Like Fed's Fisher, market must take off beer goggles because Powell's not coming to the rescue. I think he will. I just think they're gonna they can't capitulate this quickly because that's a sign of such weakness for the central bank, meaning they can't even talk about raising rates. Because if they came to the rescue this soon, that means they can't even talk about it. And then it's pretty much the emperor has no clothes, and everyone knows they may never ever raise rates, meaning inflation is just going to run wild. And they can't, that's admittance to the bond market and the global market that they can never unwind their balance sheet, all the debt on it. Now they are talking about, this is funny, they are talking about unwinding their balance sheet, and the first thing to go will be toxic mortgages, and then probably corporate junk bonds. Well, if you guys thought 2008 was bad, that this is gonna make that look like a walk in the park. But my question is, will they even get that far? I don't even think they're gonna get that far, and if they're gonna do it, they got to do it now, within the next few months, because yeah, there is election season coming up, like then the summer this year in the U.S. And I think this is what they're really doing. I'm just gonna tell you now. They're letting some air out of the bubble because inflation is really getting that bad. And it's so bad that people will vote based on just that alone. So if they can't afford gas and their cost of living is so high, like can't afford food, and it adds up over time, well, they'll vote on that. So what they're doing is what they're trying to attempt to do is they're just letting some of the air out of the bubble. Let's look at the S&P 500 as I talk. Give me a second. Yeah, even the S&P 500 broke below its 52-week moving average and broke below the support area around 4,300. And it's really just a big air pocket, just an airdrop all the way down. I mean, maybe the 200-week moving average will hold it up. And that's a straight drop to like 3,800. So from 43 to 38. Let's see how much more of a drop that'd be from the current price of the S&P 500 is at SPX is at 43.26. A drop down there testing the 200-week moving average is another 11% drop. And I think that's what they're willing to allow. And why would they do that? Well, very simple. The DXY could break out. Everyone who's leveraged up long, all the retail investors get slaughtered. So, the big fish make all the money who saw this coming, like Goldman and all the some of the big firms, institutions. And they get all that leverage out of the system because they can't let the leverage get too bad. It's been at all-time highs. Because that alone could cause like an even bigger crash later on. All right, so the DXY could break out maybe a little bit. I think it'll be short-lived. Maybe test 99 handle or 100, and then maybe. And they also want oil, the WTI crude to fall. Here's light crude oil futures. They want gas to come down. Although, I mean, it's looking like it's trying to run to $100, which it might actually run to 100, then dump with the market, but it's weird, right? It's on a 6 count, so maybe 7, 8, 9, maybe 2 to 3 more weeks of upside on crude, and then it'll fall with the rest of the market. So, by letting some air out of the bubble, they're going to get home prices back down to, I don't know, just high prices because they're so high it's ridiculous. No millennial could buy a house. Like, it's just, we have a huge housing bubble, right? And it's deflating right now, actually, and rates are going up, and I'll talk about that in a second. So if they let some air out of the bubble, house prices will fall. I don't know how much. Maybe, I don't think it's gonna be a crash. It's just gonna be like 20-30%. They might come down, which is good for the economy. I mean, you need people to be able to buy homes. Then maybe the prices at the pumps will come down slightly, not by much. Inflation, I don't think it's going to really come down. I don't think inflation is going to come down because there are supply chain issues which add to it. But it'll stop inflation a little bit temporarily. Maybe just enough time for elections. How ironic. That's what I think they're doing. And so maybe inflation will stop for like 3 to 6 months. Stop. Or slow down a lot. Where it's not as noticeable. Just enough time for, the end of summer. Natural gas, there's a huge cup and handle for that. And natural gas is used by a lot of industry. And it's a big deal when natural gas goes up. But I think natural gas is going to break out no matter what. I think this winter, the rest of it's going to be tough. It's going to be a cold one. Winters come later and they last longer. That's what I've noticed over, I don't know, past 2 decades. So yeah. All right, what else do I have here news-wise? The Fed has no real plan and will likely soon chicken out on rate hikes. Yeah. So CPI inflation versus growth in average hourly earnings. So I mean, people aren't really. Some people, I believe, people in white collar jobs are getting raises with like advanced degrees and like niche types of careers where there aren't too many people to replace them. I feel like they're getting raises, but I don't think your common man, your blue collar worker, not your high end blue collar worker with like unions, but I'm talking like just your average guy, or not average guy, but average like middle class to lower job, especially lower than middle class type jobs. Those guys aren't getting any raises. That's why none of them are working. They're like, what's the point? I mean, half of my paycheck goes to the gas and the food. Like, So, and it's represented here in the CPI, which is really a CPI. So they're saying inflation is running at 7% year over year. Nah, it's probably running 14, double, or close to it. So, U.S. pending home sales puked in December. Realtors blame rising rates. So, rates have risen a little bit, but not that much, right? Historically speaking. So, despite an unexpected surge in new home sales, pending home sales puked in December, tumbling 3.8% month over month, after falling 2.3% month over month in November. That is the biggest month over month drop since February 2021 and pushed the year over year drop back into the red, down 6.64%. Penny home sales faded towards the end of 2021 as diminished housing supply offered consumers very few options, and mortgage rates have climbed steadily the last several weeks, which unfortunately will ultimately push aside marginal buyers. Right. That's why they're not going to raise rates. I mean, the market's raising rates on its own, so they're not going to add to it, I believe. So Powell will capitulate. I think they're timing it, right? And I think they need an excuse. And I think that's why maybe in Eastern Europe, they actually want something to pop off over there. Because that's a great excuse, right? And then they'll use that and say, okay, that's why we're not going to raise rates this year. They're going to back off. And then something has to happen, right? Some event, organic or not. If something happens in Eastern Europe, that's not organic at all. It's advised. That'll probably give them an excuse, like maybe to do more QE, because they have to do more QE. Not to get the market back up and doing new all-time highs. They need to do that just to keep it where it's at, or from crashing. And I really think they know that, but a part of me still, for some reason, thinks that they don't. They don't even realize how bad and how big their own bubble is, and how much more they need to juice the markets just to keep it where it's at. Not to make new all-time highs or anything. Just to keep it from, seriously, like like a 1930s Great Depression style crash. So sales dropped in every region for real estate. Northeast fell 1.2%. Midwest fell 3.7%. This is all November. South fell 1.8%. The West fell 10%. Yeah, everyone's leaving Cali. That's pretty much third world failed state. I'm telling you guys, there's not going to be any quantitative tightening. All right, so a visual introduction to Fed tapering. A short history of tapering. Treasuries, mortgage-backed securities, federal agency debt securities. So in 2009, U.S. Central Bank employs large-scale asset purchases, also known as quantitative easing, for the first time. This was this is for mortgage-backed securities. I don't believe that they did some for the NASDAQ bubble when that thing popped in 2000. May 2013, there was a taper tantrum back then. December 2013, taper begins. October 2014, asset purchases end, and you're looking at the bonds, right, down here in the blue. You're looking at mortgage-backed securities, and then asset purchases begin again in 2020. And look at the steady rise in mortgage-backed securities. It's crazy. And treasuries. And now tapering begins again. I'm telling you, I don't even think they're gonna get to one tightening. And maybe they get away with one taper. But here's the thing with tapering. They could be tapering and still doing QE at the same time, but they won't hike. They won't do the 4-3 rate hikes they plan on doing. Here's a 12-month change in the CPI. Man, it really took off towards the end of the year. The spike going right into the holiday season. All right, minimum wage. Listen, if it goes up to $15, it's still not keeping up with inflation. And then, if everyone gets a pay increase, then guess what? The prices of everything go up, services and goods. Because the biggest expenditure for businesses is their employees. And by the way, consumers failing to make ends meet, that means that's very negative for the stock market. And guess what? A negative stock market, or a falling stock market, is very negative for businesses who hire people. So it's a self-feeding perpetual doomsday spiral. That's the problem. That's why the Fed is screwed, and they're not going to taper. Well, they might taper a little bit, but they're not going to raise rates, and they're going to do more QE. They have to, and that's when commodities just shoot straight up, and they don't stop. It's just going to be like 2-3 years of just straight up. Like it's going to be nuts. But the problem is things are going to really accelerate. So George Gammon had a good video. The Federal Reserve is trying to crash the stock market. I don't really agree with crashing it, but I did listen to this, and here's the problem. Here's what I don't think he or anyone else has even thought about. And I'm not saying anything negative again. He's a smart guy. Listen to him. By the way, he's I don't even want to say it because of the keywords. This sucks. I can't speak freely. Like, this really sucks. It makes me sound like an idiot when I make these videos. Listen, if the stock market falls, and I talked about this, I'm like, when do you think these boomers are gonna like panic? I talked about this in my last video. I think a 20% drop from the all-time high in the S&P 500 will take you around 3,800. Like I said, this is probably the target for the Fed, for the plunge protection team to come in and to reverse the market. And some event's going to happen. That'll be the excuse. And then they will do more QE. Matter of fact, they won't even taper. They'll stop tapering. Then they'll do QE and they won't do any hike. And the market will do, a rebound. Right now, I believe it's kind of doing a little dead cat bounce. And it's all dead cat bounces until it comes back down. Although on the weekly, it's not a dead cat bounce. Maybe on the daily. It'll go and retest up here. And then I don't know if the market will make a new all-time high. I really don't. Because, at some point, inflation's so bad, people don't have extra money to put into the stock market, right? But, if they capitulate on rate hikes, then tapering, and then do more QE because an event happens, then the market will rebound. I do not know if it'll make a new all-time high or, even revisit the all-time high. I think it'll just kind of have like a giant bull trap, We'll do one of these maybe. And then that's it. And then the market will trade maybe sideways or just be super volatile. Meanwhile, this entire time, commodities will be rising. We'll do one of these. Maybe then one day it will. So that's what I'm thinking right now. Because inflation is actually that bad and it happens so quickly that they're scared of it now, getting out of control. So they're going to do just enough to keep the markets like artificially elevated. And I talked about this a while back that if the stock market does do this, you're technically losing money. So, give me a second. So, bull trap, come on, piece of shit. All right, so bull trap, and then maybe trade sideways. Who knows, right? But even if it does trade sideways like this or something like that, right? Or it's just maybe it's super volatile, does one of these. If the market does do this entire time, you are losing money. And how's that possible? Because inflation's going up while your stocks stay in a trading range or steady. So you're technically losing money. The longer time that your stocks don't go up in value, you're losing money. How crazy is that? So because inflation will be running, I think inflation is going to run where it's at right now. It's just going to kind of stay there and then slowly keep rising. So year over year, you're going to be losing over 10% of your purchasing power. So if your stocks aren't going up like 30% a year, because again, there's taxes, you're losing money and you're becoming poorer every year over year. And I don't think Wall Street or anyone is even considering that or realizes that. You're almost lucky to just stay, if you're making 20K or not 20K, 20% more year over year in your portfolios, you're just not losing money. You're basically breaking almost even. So but the cost of living goes up. So you literally have to outperform the market or grow your entire portfolio like 30% year over year while the stagflationary environment lasts to get ahead and not go poor. People with fixed incomes like wages, those wage slaves, those people are just going to get decimated. Everyone's going to be poor in the next like 4 years, something like that. So things are going to get crazier, politically. But so what else? People who are retired, well, they lie about those. The CPI doesn't tell you the true inflation. So even if they adjust it, your standard of living is going to drop. And then, fixed income, you're done. Will the dollar break out higher to the 100 handle? Maybe. I mean, it could stop at any time though, and not break higher. Just make a lower high, right? Might break up to like 98 somewhere and then just break down. But since I expect more downside in the markets, I think the dollar could go test the 100 handle and then break down. All right, gold and silver. So I put out in the private group, I'm like, listen, it's probably going to dump because they're going to dump it with the markets. And that's pretty much what they're doing. I do think that gold could go retest, like best case scenario around 1750, worst case scenario down back around 1680. And why would it do that? Because if the stock market does another 10 to 15% drop, like the S&P 500 does, they're going to take the opportunity with margin calls to smash the metals one last time possibly. This is probably the last time they're going to be able to smash it hard. So they're going to do it. And that's because the Fed will capitulate and then it's game over. It's full-blown roaring bull market for gold and silver. Now, a lot of people are complaining, like, why hasn't this happened yet? I mean, don't forget, gold did make a new all-time high in 2020. We had an awesome time in 2020. I mean, my portfolio went up like 10x. But for some reason, people thought that they're going to now, raise rates, and that people are still under that illusion. And gold sold off, so does silver, which makes no sense, while other commodities like lumber and copper, every other metal went up in 2021. But that's because I believe a lot of people just sold their metals and went into crypto, chasing crypto to make quicker gains. I do believe a lot of the money was diverted away from metals. But here's what's funny, right? So if the stock market does poorly, has another 10%, 15% correction, cryptos are going to crash too. And I do think it'll be a short-lived crash for both the stock market and cryptos. But I don't think cryptos are going to recover and make new all-time. I don't think Bitcoin will, nor will Ethereum. Only the cryptos I hold are going to be making new all-time highs. Because those are the perfect inflation hedges, right? Or the one is, right? So I think this year, 2022, will be the year for gold and silver to finally go into their bull market in the mining stocks. Because their earnings are going to outperform everyone else's. And guess what? The prices have to go higher for miners to not shut down and to keep mining. And electronics, everything still needs these metals, these rare earth metals. Because they don't just mine gold and silver. They mine other metals when they mine for gold and silver. But silver goes into like all electronics, all semiconductors, right? And So we're going to see 10 baggers, 50 baggers, 100 baggers in mining stocks. It's just I was wrong, and it didn't happen in 2021. I was wrong about that, and it sucked. I've been just holding this entire damn time. And I finally capitulated towards the end of last year, back in December, and I took losses. And I'm glad I did, right? Well, I'm not really that glad, because gold did go up this past week, but I locked in those losses for tax purposes. But now I'm sitting on cash, and I'm also hedged, and I'm waiting to buy the dip on mining stocks. I'm going to release the ones that did the best in 2021 in my portfolio, and then we'll look more into them and brush up on the news and developments on all of them. And then this will be it. This has to be it. Because listen, it's been a whole year bear market. We just have basically a giant bull flag on both on the weekly. And there's no way that they don't perform as the Fed capitulates with rate hikes and tapering. And the fact that psychologically Wall Street and everyone is going to realize that they can't ever normalize rates or shrink their balance sheet is the definition of bullish for gold and silver. I don't care what anyone says. They're going up. Like, who knows? Just a 1x on gold and silver, just a 1x on both of these is like a 10x on the mining stock. And nobody is in mining stocks right now. Matter of fact, a lot of people are going to sell them if the market sells off and there's margin calls. And that'll be the ultimate dip buying opportunity. Once again, but I'm telling you guys, this will be it. Because they can't taper and keep raising rates because the economy implodes because it's all debt based, right? And that's all I have to say. There's really not much more to say. Also, I think it's too late to jump on the energy trade for oil companies and oil, but for crude oil. But these crude oil and energy stock ETFs, once they correct with the next market drop, I'm looking to buy the dip on these as well. I'll put it in the private group. All right. I think that's pretty much everything. What else? Oh, yeah, the dynamic yield curve. Let's talk about that. All right, here's what the yield curve looked like for the NASDAQ bubble, right? So yields rose, and then the yield curve it inverted. The long end of the yield, which is like the 30-year bonds, was lower than the short end. And that's what a yield curve inversion is, right? It's not supposed to be like that. The short end of it is supposed to be lower while the long end is higher, because interest or yield is supposed to be higher for holding something a longer period of time, right? All right. This is what it looked like in 2008 before the MBS bubble popped. They pretty much did the same thing. Here it is, right? Here's what it looked like right before COVID. Now, it's not really inverted. Oh, it was right here. Yeah, this was towards the end of 2019, right? It was trying to invert, but you have to remember they're artificially manipulating the short end of the yield to keep it from inverting because people will see that. By the way, the line is further down this chart because interest rates historically are lower and lower and lower to literally zero now. So back in the 90s, interest rates were more normal. They were around 5 to 6%. 2008, it was around 3 to 4%, and now it's like below 2%, right? All right, let's take a look at where it's at right now. You can see that it's like trying to invert. Like when you look at the 5-year, you can see that it's like pulling up, right? So here's normal looking. And then look, it's going up the long end, and then right here, right now, this is trying to go higher. Meanwhile, this is pegged to zero. Well, that's manipulation by the Fed. If they weren't manipulating it, this would be like up here. So we would have an inversion. And they know that. So they're predeterminedly popping their own bubble to stop inflation temporarily. And then they're going to need an excuse to altogether, no more hikes, no more tapering, more QE. And my guess is the excuse is, I believe the Omicron was going to be the excuse, but no one's buying it. So they can't use that either. So now it's going to be something in Eastern Europe. I don't know. But I think that's what it is. Right. All right, guys. I think I talked about everything needs to be talked about. Smash some likes. Check out all the links below the video. Go to my Twitter. Go to my private. If you want to join the private group, you There's a fee to pay to enter. Then there's a $20 monthly fee. You get an email invite. If you don't check your inbox, then you're not going to see the email invite. You have to message me. Because there's like someone out there who doesn't want me in the private group, I guess. Yeah, find me on Twitter. I want to add more social media accounts. I do have more. I just don't keep up with them because it's so much work. But follow me everywhere. Go into my free chat groups, Telegram chat groups. You guys can talk to each other in there. Recently, it's been quiet. There's a NewsRoom. I keep you guys up to date with everything there. I do post a lot of tweets in there. It might be annoying to some people, but I'm just on Twitter a lot. Yeah, I am doing outbound messaging on there, so that's also annoying a little bit. I'll probably slow down on that a little bit. But yeah, find me everywhere. Later.